ladies and gentlemen, and on behalf of the Global Ethical Finance Initiative, or GEFI, as we'll be referring to it from now on in, a very warm welcome to the latest in our series of ethical finance roundtables, which have now been running for more than 10 years. Many of you will know me by now, I think, but for those who don't, my name is Graham Burnside, and I am a senior advisor with GEFI as well as the regular chair of these events. Those of you who were with us for our last roundtable may recall that our topic then was carbon pricing and accounting. So quite a technical one, but nonetheless central to what the transition to net zero will require. Today's subject is a much broader one, but equally important, namely leadership and what is required of it to embed ESG values within the culture of financial organizations. Over recent months, it has been observed more than once that great as the challenges of tackling the global pandemic have been, those lying ahead of us to address the climate emergency are many times greater. It can, I think, fairly be said then that the need for leadership at both organizational and indeed global level has never been higher. The COVID crisis has provided striking examples of different leadership styles, to put it at its most neutral, and it has surely given us lessons to learn. At any rate, the crisis forms a vivid and globally, sadly, very much ongoing backdrop to the questions we're looking to tackle today, namely, what sort of leadership is needed within the financial industries to support the transition to net zero, and how do we go about building a corporate culture which instills a sense of purpose based on responsible values? Some big issues to address, therefore, and I'm delighted to say that, as ever, we have secured three front-rank speakers, themselves all leaders in their own right, to present to us on these issues, and I will be introducing them shortly. First, though, can I lead you through a few housekeeping points? As I'm sure most of you will know, one of the advantages of this medium is that we can ask questions in real time via the chat button, which you can find at the foot of your screen or somewhere round about it at any rate. There should be plenty of opportunity for questions and debate after we've heard from our speakers. So can I encourage you to send in your questions as we go along? As usual, the GEFI team are standing ready behind the scenes to get things organized, and we'll tackle just as many as we can in the final part of the session. I should mention too that we will be recording the event, and in a few days' time it will be available on our YouTube channel and also on GEFI's own EFX platform. Please feel free to share any thoughts as we go along with other attendees, again via the chat function, and if you feel so inclined, with the wider world via Twitter at Finance4Change, that's finance figure 4 change, using the hashtags ethical finance RT and path to COP26. And if you didn't pick any of that up, fear not, as these details are being circulated to you as I speak. Finally, at the end of this event, for those of you who are interested, we will be trialing a new post-meeting networking feature, and I'll give you more details on that at the close of proceedings. But for now, it's my pleasure to introduce the first of our three speakers today, namely Michael Cole-Fontayn. Michael was a career banker, having spent no less than 35 years with BNY Mellon, focusing mainly on the corporate finance sector and concluding as chair of the bank's Europe, Middle East and Africa division, a role which included responsibility for governance culture, very relevant to this afternoon. Since leaving the bank, Michael has joined a number of advisory boards within the financial services industry, including the Citi UK and FICC Market Standards Board. He is also a board and executive committee member of the Global Financial Markets Association and is currently chairman of the AFME, the Association for Financial Markets in Europe, and of the CISI, the Chartered Institute for Securities and Investment. From all of that, you will gather that he is supremely well placed to give a broad overview of the questions we're looking at today, the importance of corporate culture and purpose, and what can be done in practice to embed social and environmental responsibility within financial organizations. Over to you, Michael.
Well, Graham, thank you. Thank you, team Gephi, and to all of those who have tuned in to listen to our little panel today. Certainly, we are in the midst of a global health crisis, a global economic crisis, and as Graham had indicated as well, something very close to your interests, a global climate crisis as well. And initially, the financial services industry has proven pretty resilient amidst this crisis, been part of the solution, has moved to operating in a new environment, but dealing with a very different set of risks. A renewed focus, I would say, on corporate culture and an increasingly complex set of pressures and demands from across businesses, clients, governments, and regulators. And these factors are certainly impacting all firms' decision-making processes, established governance models that have guided boards and businesses and business leaders for several decades. So in short, leadership is up for renewal and refresh and reimagining. And we need to ensure that management can act really in an agile way and quickly in this constantly evolving landscape, prioritizing first and foremost in a health crisis, the safety and well-being of the company's employees and all other stakeholders, certainly the customers, the clients, and so on. And certainly this pandemic has demonstrated that good, clear governance and a clear sense of corporate purpose are absolutely essential to achieving the corporation and company's long-term objectives. However, even before this pandemic, this health crisis overwhelmed our society, business models and personal lives in the mainstream view of what the purpose of the corporation is have evolved pretty rapidly. And the traditional emphasis on shareholder value is no longer the sole consideration. Corporate purpose absolutely needs to go beyond shareholder value and should be about producing solutions and impacts, not just profits. The Oxford professor Colin Mayer has perhaps put it best with his comment that corporate purpose should produce profitable solutions to the problems of people and planet, and not to profit from producing problems for people or planet. And it's that balancing of shareholder expectations of maximum return against the other priorities is one of the fundamental principles for corporate management. And the legitimate, very legitimate concerns of employees, regulators, governments, other stakeholders must have appropriate attention. And this is even more urgent if we consider that there is a strong and growing body of evidence that shows a positive link between corporate strategies that focus on societal needs, employee engagement, and strong financial performance. And if a corporation's statement of purpose is credible, demonstrating a real commitment to profiting from solving problems, It builds trust, authenticity, as well as the loyalty of clients, employees, suppliers, communities. And it also helps provide a very clear narrative for, certainly in the financial world, regulators, but also governments. And we all know we're going to have a lot more government in our lives. So Graham, let me pause there, bring in other speaking colleagues, and then we can perhaps continue to develop this theme collectively.
Many thanks indeed, Michael. That's a very helpful introduction. We'll be coming back to more of these themes, I'm sure, slightly later on. But as you say, for now, let's move on to our second speaker today, Helen Cook. Helen has over 25 years experience within the financial services industry, initially in corporate and investment banking with a number of organizations, but moved into the HR arena when she joined what is now the NatWest Group in 2001. Since then, she has held a number of specialist HR roles within the group and is currently their Chief HR Officer. Helen is the ideal person, therefore, to bring us a case study of NatWest's experience in this area, and in particular, how it has gone about the task of redefining its corporate culture and building its diversity plan. We look forward to hearing how her own role as Chief HR Officer has itself changed as part of that process. So welcome, Helen, and I'm delighted to hand over to you.
Thanks very much, Graham, and welcome. Welcome to everybody to this session today. It's a pleasure to be here and actually to share our journey and the cultural trip we have been on, which, you know, whilst I'll talk about the most recent times, actually goes back over at least 5 years now. It's clear organisations can't meaningfully impact the world around them with words alone, and these appear hollow words without the underpinning actions that organisations need to take to create sustained change. And as Michael rightly said there, it's not about shareholder value alone. It's about creating kind of deeper and wider societal change as we move our own strategy forward. Doing both will change your culture, engage your people, and give you organisational purpose. Our journey includes partnering with colleagues, with customers and suppliers, a whole ecosystem, to skill build our leadership and reshape our processes to ensure everything we do is pivoted on our purpose. And our purpose is that of championing potential, helping people, families and communities to thrive. The irony now looking back is, even though we started this work back in 2018, many of you will recall we actually launched our purpose publicly on the 14th of February last year. And it honestly has been a North Star through these really turbulent times. But when we started looking at purpose, if we go back a couple of years, we engaged in a broad inquiry with colleagues across the organisation, with customers and with our wider supply chain to get their view and their insight on what the purpose should be. We also worked with a number of external partners, and most significantly with Charles Wookey and his team at Blueprint for Better Business, which is a charity, but actually a critical friend charity. They really hold us to task on whether we really are meeting the needs of all of our stakeholders, challenge our thinking, and make sure we avoid anything that could be perceived to be a vanity project. In 2019, when we looked at our purpose and how we could benefit society as part of our strategy, the championing of potential was born as a concept. And that is about helping, as we said before, people, families, and businesses to thrive. And it sits at the core of our business and guides our decision making. And I think back to kind of Michael and Graham's points, you know, it has to be weaved and integrated deep into everything you do, or alternatively, it feels like a packaging in a superficial layer. We see it not only as the right thing to do, but as an imperative to our future success as well. And that's actually commercial success as well as the wider success of the organisation and the success of our customers, our colleagues and our communities. And as it was launched, I mean, never has it been tested more kind of truthfully than in a year or the 14 months that we've all been through, when it really became something that we had to put into action straight away. We started off by putting it into action in relation to our colleagues, by giving them security from day one to understand how they would be supported through change, to our customers by helping redesign business banking loan programs and the CBILS program. So straight away into actions rather than words. We anchored our purpose really about 3 main areas to focus on, because you can't focus on everything. So again, and one of our key learnings in this is not to try to boil the ocean, because each subject that I will talk about in and of its own right is huge. So we anchored it on 3 core tenets as a starting point, but it's only a starting point, it's not the own mission. Enterprise, which is about removing barriers to enterprise and helping the economy build back better. Around learning, both the financial capability of our customers and potential customers and society as a whole, but also learning as an organisation to ensure that we continue to evolve and grow. And in due course, we will be launching learning for both customers, but also for the youth section. And this will be learning that becomes open source learning, making our collateral available to the young youth of today to actually access the skills of the future and to make them more employable and relevant for the workforce. And then finally, and probably very, very kind of pertinent right now, is that of climate. We're leading the fight against climate change by playing an active role in transitioning to a low economy. And these are all seen as enablers to our purpose. And actually we've taken a chance to look at all the changes we've made to all our systems, our processes, from recruitment to onboarding to products to capital allocation, so that the external environment supports us in being purpose-led. We're focused on how we build capability with training and development so people know how to be purpose-led. And we've invested huge amounts of time, effort, and resource into taking all of our leaders through leading through purpose, so they understand their own personal purpose, how that aligns with the organisation and how that aligns with society. And on the diversity side of things, as we look at this year, the social impatience that we see in the external world, across the world, frankly, right now, has really kind of brought to force, where we need to kind of continue to focus. We've just finished a 5-year inclusion plan, and we've seen really good progress around gender specifically, and some of our BAME, Black, Asian, Minority, Ethnic areas. But there's so much more to do. And the social impatience we saw in the US last year, and probably more specifically in the UK around gender earlier this year, just shows that there is just so much more to create a space of equality there. And we remain committed to equality across all protected characteristics. We worked very hard last year around the Black Lives Matter approach to think really carefully and not to come out again with headlines that talk about what maybe someone wants to put in a newspaper the next day, but really to be thoughtful. And again, we've taken our whole ecosystem of colleague, customer, and community and made our commitments through a Black, Asian, Minority, Ethnic task force in October. And we're going to publish that. And we published it in October. We're just doing a refresh this week, and we will hold ourselves to task on that, so that we actually, again, ensure they're not just moments in the headlines, but really following through on the commitments we have made, and putting colleagues who don't sit in HR, sit in the business and other parts of the organisation, to really drive that through, to really include our suppliers, to really include our communities as we work with enterprise, and ensure that entrepreneurs of ethnic minority backgrounds, schools where social mobility is limited, just really working with all of these systems to try and push through and create equality across the piece. And we're not going to hit those in 1 year or 2 years. It's going to be 5 years. It's going to take time. It's about really making it integrated into the DNA of how we do things, as opposed to short-term targets that kind of effectively tick a box. And it's not about ticking a box. It's fundamentally driving it into the culture of how we do everything, right from the onboarding moment of putting an advert in the paper, to that person growing, developing, and succeeding in the organisation or the community. Moving on to climate change, I mean, this is a real central and very visible part of our purpose-led strategy, and one of the biggest challenges of our time. And of course, for NatWest Group, as a leading bank in the UK for business customers and one of the largest for retail customers, we've got a significant responsibility here. And when we talk about culture, culture doesn't come with all the nice pieces, it comes with accountability and responsibility. And as Michael said, from a governance perspective, those words are not small words, they are very important words. And we have the ability to encourage, to enable, and to lead the way in helping people across the UK to transition to a net zero carbon economy. And you'll hear us use the word transition a lot. This is not about pulling the rug and saying we don't support oil companies or we don't support X, Y, Z. It's about helping companies change, helping them develop, ensuring you don't pull the rug so the supply chain behind them collapses. It's about supporting, enabling, providing products and insights to actually help people change to the new way of providing energy to the world as opposed to fossil fuels, etc. So we are working in partnership, whether that be in our commercial and corporate side of the equation, where we are working with kind of the CEOs and CFOs and strategy teams there to think about how they run their businesses different, or whether it's the issuance of green bonds, etc., through our markets business, or in our retail side, looking at mortgages and looking at the kind of relevance of pricing of mortgages for greener mortgages. So we have a green mortgage product there. So just trying to work across the piece by just evolving through things as opposed to trying to be radical and headline seeking. So we are keen and we are committed to playing a leading role in tackling climate change and helping our customers do the same. And we've taken some pretty good strides already on our own operations. We're now net zero on carbon, and we've done a lot to de-risk our balance sheet in that space as well. But we also know we're just starting out and there's a hell of a lot more to do. Just a couple of examples of some of the things that we did, and some of these would predated some of the purpose and culture work. From a remuneration point, we put the executive team onto a climate ambition back in 2019, so predating some of the sort of more recent headlines, just putting people involved there and actually making sure that we commit to actually achieving things and putting people accountable for achieving those things. We are sponsoring COP26, and in our role there as the banking sponsor, we want to show how we can lead the way on helping businesses across the UK tackle climate change and access financial resources that help them to take advantage of the transformation journey on that transition to net zero. We've got a partnership that we've just launched with Microsoft, where we've joined forces with them to help business customers to understand. And these partnerships and collaborations across industries are really, really key to change of meeting purpose and culture. And likewise with Octopus Energy, I launched a partnership with them to help make it simple for customers and colleagues to move to electric vehicles. So lots of simple partnerships, but all driving a culture of working towards our purpose, working through a culture that actually looks to drive for solutions and outcomes that are driven to meet the needs of our customers, whilst also meeting the needs of our purpose. I was asked also to think about kind of how has my role changed across the period of time that I've sat in the job, and that's since 2017. And I think we have one or two investors who invest in us just because of some of our diversity work and they're on the West Coast, and that's kind of been something which I've been involved in right since 2017. But I'd say the desire of investors to talk to myself and my team now around the work we do on inclusion and the genuine interest to get into the granular detail around how inclusive we are as an organisation and how that goes through our whole ecosystem is kind of multiple times what it was even 2 or 3 years ago. And certainly now wanting to talk about remuneration, inclusion, culture, and increasingly well-being. So many years ago, I'm pretty sure as CHROs, we didn't talk to investors. Increasingly, it's, we are doing that. So that's certainly one key change. I think the other area now is on skills, and actually how those skills play a key part in developing a kind of agile culture of the future. And then far more, and I've talked about this twice on other calls today, is about ensuring that actually from a cultural perspective, we look after the well-being, not only of our workforce, but also of wider society. 10 years ago, if you walked into any boardroom or any executive committee and talked about well-being as an HR person, it would have been seen as a soft piece. I think culturally now, what we've seen specifically over the last 12 months is the importance of humanity in leadership, the importance of empathy in leadership, and the importance of looking after the whole person as we look at our leaders, managers, and individuals. And it sounds like a really soft thing when people talk about it in that, but it is the hardest thing. It is the most commercial thing, because it's all about success, it's all about growth, it's all about productivity, and it's all about then balancing those needs of a stakeholder. And a truly purposeful organisation looks after its colleagues, its customers, its communities with true care. And actually today we're launching an initiative with Nuffield Health about COVID rehabilitation. And this being actually just looking after both our colleagues, their families, but also our third-party contractors. So what we're seeing is organisations become less bounded and less boundaried and more boundaryless as they look at their purpose and their culture going far beyond their own individual workforce. And that, again, for me, is a real change. And I find myself increasingly collaborating with partners, be they technology firms or other partners, to see about how can we launch things that are for the greater good of society or mutual benefit to all of our colleagues. And one initiative here is around learning. So as a learning organisation, how do we now take the collateral that we have working with partners to ensure that we can actually help the youth of the UK become better ready, better equipped to deal with employment of the future? And these are things that used to be very internally focused. So again, one of the key things about the role is the external focus of the role, the investor side of the role, and actually, ironically, human side of the role, which given the role you would expect for human resources, but I think for many years has been lacking in that space. So, I say with no shame and with great pride, actually, that the humanity is really coming back into the workforce. And as we move to the new ways and the hybrid ways of working that the organizations will do over the next 12, 18 months, I think we will see that the importance of that in leadership, in purpose, and in cultural health will be making sure that we do not lose that again. So with that, Graham, I will hand back to you, and I'm happy to take any questions when we come back together in the Q&A session.
Thank you very much indeed. That's very comprehensive, Helen. I think you've touched on just about all of the major issues that we were hoping to cover today, and that's a great conspectus of really what it is that we're here to talk about. And yes, I'm sure you will have stipulated many questions. Indeed, I see a few have already come in, and we will come back to those in a moment. But first, it's my pleasure to introduce our final speaker today, Karina Robinson. Karina is currently CEO of Robinson Hambro, which focuses on advisory work at chairman CEO level. She is actively involved in the City of London, being immediate past master of the Worshipful Company of International Bankers, and also has an active presence in the academic world, presently being a member of the Court of Governors of the LSE. Her own principal career has been in journalism, and for a number of years she was senior editor of The Banker magazine, as well as a columnist with the International Herald Tribune, and remains active as a commentator on finance and international affairs. Karina has had a long-standing commitment to diversity, and I'm sure she'll have thoughts to contribute on that topic, which we've already said a bit about, Helen. More broadly, though, we look forward to hearing her views as to how well financial institutions have fared in translating purpose into action. And one particular question I'd appreciate our thoughts on is whether we in fact have a sufficient supply of candidate leaders for the tasks ahead, and if we don't, how we should go about producing them. Karina.
Graham, thank you very much. I'm going to miss out on your question because it's such a jolly difficult one. And it will get me, going down another path. But why don't you ask me that afterwards, if I may? It's difficult enough. You put me in a position to follow two leaders in the ethical finance space. Michael Cole-Fontayn, who was talking about diversity. I mean, Michael and I have known each other since we were graduate trainees many, many, many years ago. And the fact that he led on things like that is incredible. And Helen is working for a bank that is living exactly what we would like to see so many banks and organizations go through, which is that cultural change. But so what I'll do is I will just give you a few thoughts and then be open to questions as the others are. I think we're living the perfect moment for ethical finance, a moment of promise, a moment of change. There's a convergence of the personal and the professional, of stakeholder capitalism and environmental awareness. Doesn't mean finance itself is perfect. Everybody who, I think it's over a majority of those who applied for COVID loans, turns out it's fraudulent. You just had the German company Wirecard's missing 2 billion. 95% mortgages are out there again, which means we are going to have a financial crisis on the back of it. So not everything is perfect, but I'm incredibly positive about the moment we're at right now. And that's because overall, the carrots and the sticks are aligned. Now that's a bit of a misjudged metaphor, but I think you get the point. What are the sticks? The sticks are the spirit of our times, the Zeitgeist, amplified through social media and regulation. And what are the carrots? The spirit of our times, the Zeitgeist, amplified through social media and regulation. I told you it didn't hold up as a metaphor. In the Q&A, you can tell me which of the following points that I'll make over the next few minutes are carrots and which are sticks, because I don't think it's that clear. Now, all of these issues that we're going to talk about, the issues that Helen and Michael and Gefi concentrate on, they form the background of discussions at board level, at leadership level. And once you have that happening at board level, rather than just having the graduate trainees interested in it or some academics, that's when change happens. A survey conducted by the Pew Research Center found there was growing dissatisfaction for the model of pre-COVID capitalism with its high levels of inequality and its other problems. Even richer people surveyed supported bigger government benefits, more public housing, and higher taxes on the wealthy, basically on themselves. Now, this dissatisfaction with our capitalist model is not new. For my generation, and my generation are generally the ones in charge now at board level, CEO, chair level, the model of shareholder capitalism lost its shine a few years ago. But how do you implement that at company level? It takes time, and it's generally has to be done in sync with society. And society in the finance industry very much means in sync with investors. As Helen reported, it's about investors and what they want because they've got the money. And that's a very important part of the equation. Now, the pandemic accelerated this shift. Leaders now ask about their employees' mental health. They ask about their families. They expect to be told if there's a major home issue which will impact work. And here's the difference, help that employee work around it. This is a new empathetic leadership. It doesn't mean that everybody's doing it. And I think in the Q&A, we could discuss those who are and those who aren't. I very much hope that those who aren't doing it will be left behind, because that will be the only way in which we can make change happen. You can't just have a few outliers who are not applying these policies and who do very well on the profitability side and keep on recruiting very good people, because otherwise you won't get the full change happening. McKinsey talks about the talent management strategy and the bottom line. In a recent article, pointed out that 2/3 of US-based employees they surveyed, 2/3 said that COVID-19 has caused them to reflect on their purpose in life. And nearly half said that they were reconsidering the kind of work they do because of the pandemic. Millennials were 3 times more likely than others to say that they were reevaluating work. And millennials and Generation Z are forming a larger and larger percentage of the workforce. And they have changed the way my generation has looked at things. It's a fascinating example, if one wanted to go into anthropology, of how the young are changing what the old did and felt capable of doing. But it's not only McKinsey which says that people who live their purpose at work are more productive, more resilient, likely to be more loyal, more engaged than those who don't. I'd like to talk about the next point, my next carrot or my next stick. Social media, it amplifies the spirit of the times. How do you avoid being caught up in the latest issue, being on the wrong side of whatever's making the headlines? The senior partner of a Magic Circle law firm, for those of you who are not UK based, meaning one of the top ones in the UK, and these are global firms, and I would say the law firm that is the outstanding one in changing its culture. He sent me an email a couple of months ago, which is very relevant to this, and I quote from it. I have for a long time been worried that it's very difficult to adapt business models and culture quickly enough when the external environment requires it. So the only option is to try and come up with a strategy that involves making business decisions on the basis of the high watermarks and trends. If you do that, you have a better chance of having a sustainable business. If we get rid of all the legal lawyer-like words, what he's basically saying is do the right thing. Last, another carrot or stick is regulation. You may not think of it as a carrot. Regulation in financial services is always seen as a stick. But interestingly, a group I'm involved in, the Oliver Wyman Forum, which has CEOs and chairs of major financial and professional services firms in it, in all our discussions, I've noticed over the last 8 months since it was started, we've come to the conclusion that more regulation will make things easier. And yes, you did hear me. More regulation will make things easier. The CEOs from very large financial institutions believe they face undeliverable expectations to be at the forefront of solving rising inequality, racism, and environmental disaster. It becomes much easier if the Financial Conduct Authority or whichever regulator you fall under dictates something, then all the firms have to obey and you end up with a much more level playing field. Interestingly, I noticed that Nikhil Rathi, Chief Executive of the FCA, gave a speech recently where he stated that, quote, diversity reduces conduct risk, and those firms that fail to reflect society run the risk of poorly serving diverse communities. And at that point, diversity and inclusion become regulatory issues. You know, risk and regulation go together, and culture. I predict that the FCA will come out with targets and accountability metrics for financial institutions to do with ethnic minorities and diversity before the end of the year. And you can hold me to it. Thus ends my quick overview of carrots and sticks, and I will let you decide which they are and hand back to you, Graham.
Well, thanks very much to you, Karina. A lot of interesting, quite provoking questions there. So, as I say, many thanks, and indeed to all of the speakers so far. We'll be moving on to questions from the virtual floor very shortly. So can I encourage you to continue to send these in. Before we do so, though, we thought it would be interesting to bring our speakers together as a panel to discuss further some of the threads which have emerged from what we've heard so far this afternoon. Now, I very much hope you'll treat this as a free-flowing discussion, but to get the ball rolling, I thought I might throw a quote at you. from the great economist J.K. Galbraith, who said, all great leaders have one characteristic in common: the willingness to confront unequivocally the major anxiety of their time. Well, I think we can all agree that post-COVID, the major anxiety for us all is the climate crisis, as everyone today has already touched on. So I suppose to get my question is, do you agree with him? And in what I suppose is another version of the question I put while introducing you, Karina, how do you think the current leadership within the financial world is measuring up to that test, and do we have enough people who can do so? Now, who would like to start off on this?
I'll happily start off, Graham, because I rather avoided the question when you asked it before.
Thank you very much, Karina.
It's very difficult being the leader of a financial or professional services organization. It's a hugely difficult thing, and both Helen and Michael know about it. There are so many stakeholders involved. I think some of the leaders have done a great job, and as Helen said, the humanity is showing through, and that's very important, because there used to be a separation between business and what you might call business morals and how you behave with your friends and family. And those have now become integrated, which means that you're talking about a much higher level of ethical, you can no longer say, oh, that's business. And there's a responsibility to the grandchildren, the next generations. But I'm concerned that there's some leaders who haven't really stepped up and who make a lot of noises. I'm obviously not, very carefully not going to mention whom, but I would say one could look at perhaps how the idea of hybrid working, which I believe is a huge part of how you treat your people. And some of the best firms, what they're doing is they're saying, the teams come together 2 or 3 days a week, and if they want to work from home, the others, it's fine. But what you have to do is you have both the brainstorming and the other, and you work with people. Then there are firms like Goldman Sachs, JP Morgan, who are saying we need you in the office 5 days a week. And I think that is ignoring all the learnings from where we've been. You don't brainstorm with your colleagues 5 days a week. Believe me, you don't. Half the time you're busy traveling anyway, you're busy in client meetings. There's a bit of a presentism, I think it's called presentism, I never know how to pronounce it. And that was rampant when I was in the city, in my career in the city, and it was such a waste of time. I think those banks are ones that, and I don't think, my last point would be that you can't quite separate how they treat their employees to how they treat climate and governance. So ESG, we're doing great things on the climate front, but then you don't turn out to sort of be treating your employees very well, or the governance. I wouldn't believe your climate claims then, because I think you haven't actually absorbed the lessons.
I think Karina makes a really good point there, and Helen did as well. And unless this is authentic and it is the lived experience of the leadership of an organization that transmits through middle management, you haven't actually embedded your purpose. And I thought Helen did a really good job of describing the very practical steps that the NatWest Group is going through to embed. And it's often having to do this from the bottom up. We're asking leaders to undertake a whole new range of activities, where we've gone from an environment really tightly controlled of saying, don't dare make a mistake, to almost celebrate mistakes and learn from them. We're going from control to empowerment. We had to do that to trust employees as everyone went into lockdown and remote working. We're going from the board saying to the CEO, write us a strategy to experiment, learn, be agile, iterate, innovate, from do not fail to fail fast and learn from that experience and do it again and again and again. And these are very different changes for leadership to adapt to. And that point that both Helen and Karina have made about seeing it human, I think is that opportunity that is out there. And I was thrilled to hear Helen talk about well-being in such a positive way, because not only does it reduce risk in an organization, it actually empowers the organization. And certainly for those of you who are deeply interested in this subject and how professional and related services are coming together around this subject and discussing it, the City Mental Health Alliance is a very good place to have a look. And so just a few thoughts and reflections that I'm sure Helen will have more.
Yeah, I'll just build off that rather than repeat what has been said. But I think, within the kind of cultural piece, and clearly, in financial services, we are, risk management. It is a risk management business. And actually, how do you develop that risk culture that aligns to environmental, social, and governance issues, but also is psychologically safe for people to raise issues? And I think we've seen that a lot across recent times, which is, how do we create a culture where people will speak up when stuff goes wrong? Because to your point, Michael, there, historically it was sort of, don't fail. Now, actually, you can't have a don't fail and an innovation and an evolution going on. So I think it's really important that we talk a lot about not only well-being, but the psychological safety aspect of that as well, and just making the culture safe to speak up. And then obviously there are mechanisms when it's not safe to speak up that you can go for as well, to make sure that we acknowledge what's going on. And increasingly what the city is seeing in that space is issues of social kind of unrest or unhappiness, in people saying, I'm not happy with the way that environmental issues are being dealt with across the sector. And actually that's allowing a really good conversation to happen, because actually working with the FCA and our regulators, to your point, Karina, actually we can start to deal with thematics there. And actually culturally for the city, that's a good thing. I agree, by the way, Karina, entirely on your comment regarding regulation and targets around inclusion. Ultimately, because people don't do enough, these things will come upon us. So actually, when I was speaking to Sheldon Mills at the FCA, I was saying, actually, my aim is not to allow you to give us targets because we'll prove that we're doing the right thing. Because actually those targets only come because progress doesn't happen fast enough. So I guess to your question, Graham, my view is, I think we're dealing with the right issues. I think when you talk about the purpose piece, and certainly looking outside of the sector to places like Unilever, it takes about a year per level of organisation to change and deliver and embed a purpose culture. So this is a 5 to 10 year journey for most organisations, and all of us are at different points in that. And then I saw something on hybrid working from another company the other day, which I just thought was really smart, and they may well be on the line, so apologies if they are and I embarrass them, but I won't name them. But when they talk about, what's the office for? Because you're thinking, it's, work is in multiple locations now. The question is, what do you go to the office for? And they have a lovely little phrase, which is heads up when you're together doing training and kind of just being out there, being seen, visibility as a leader. Heads down, that's at home, working from home, and heads together for collaboration, which I just thought was just a really lovely, and it's not a NatWest thing, by the way. We're trying to work our version of that, because actually that's exactly, I just thought that was really smart and really simple about, why do you need to go to the office? What do you go there for? And actually, to your point, Karina, if you want to attract the talent of the future, if you want the skills, which are increasingly the things that we are all after, they are the new currency, then you're going to have to offer a workplace that provides flexibility, that understands you, the person, as opposed to you, the skill, and actually takes the human into account, because otherwise they will go somewhere else, because someone else will be offering that. And actually the war for skills now is such that we really need to get together. And for those of you, obviously everyone here is kind of financial services, the Financial Services Skills Commission is putting out a skills framework on all this work. And actually it talks about some of those skills of the future. And funny enough, not one of the first 8 skills we're putting out is empathy. So there's hard skills and there's behavioural skills, and they are really important. But empathy, adaptability, teamwork, and relationship management. These are all things that actually are going to be increasingly valuable as we move forward.
Thanks. You, in your introductory remarks, Helen, talked a bit about NatWest's policy on diversity and where you are currently on that. Karina, I mean, this is obviously a field that you've had a great deal of involvement in too. Can you maybe say a bit about what you really see as the positive benefits that come from engaging properly with that?
Graham, I do have the most wonderful anecdote about it. I mean, I think...
Good, we like a story.
Shall I give you a story? Okay, so I kept this note here. Banks with more women on their boards commit less fraud. Now, it does sound almost like a joke, but in fact, a professor called Barbara Cassu of Cass Business School at City University and researchers compared data on board and leadership diversity, which is exactly what we're talking about, leadership, at large European banks against what fines had been levied against them by the US government since the global financial crisis. So, and they took into account all sorts of different metrics. This was a very thorough research, and they found that banks with more female directors faced lower and less frequent fines for misconduct. And it saved those institutions in all 7.84 million a year on average. So the conclusion, banks with more women on their boards commit less fraud. Now that's just an anecdote, but actually it does stand up. And I work with the Inclusion Initiative. I'm co-founder of the Inclusion Initiative at the London School of Economics. And our aim is to use behavioral science and data to create more inclusive cultures. NatWest is a great example of how to do it. And Grace Lorden, the professor I'm working with, has done some work there as well. We work with MasterCard and others. The thing is, though, I think for a number of leaders, Graham, there's an issue with, diversity inclusion is not working in our firm. We don't understand why, but I don't dare admit I don't understand why. It's a very difficult thing to admit you don't understand, especially when you're a CEO. And I think that's one of the things we need to deal with.
Yeah, and I think another side of the diversity piece is being really honest that unless we reflect the customers that we represent, the communities that we live in, we will not be commercially viable, because actually those people will go to other places where they can access that. So it's increasingly important that you can reflect, understand, and empathize with the needs of your customers and their cultural nuances, barriers they face every day, whatever it may be. And therefore, actually, it comes back to your commercial imperative. From a risk perspective, you've just given the kind of business case for that. From a commercial perspective, it is just as important. And it's, all these axes are increasingly, coming to bear. And again, back to talent. People cannot, as I've had said to me many times, I cannot be what I cannot see, right? And actually, that's a very poignant thing when a young Black colleague will say that to you, because we don't have enough senior Black people, and we're honest about that, right? But actually, if they cannot see the role models, then actually they'll go places where they can see the role models. And there is plenty of talent out there. We all just need to open our eyes and our ears more, and that's us as well, to ensure that we actually really get on this agenda, because there's some brilliant talent. Yeah. But actually, how welcome will they feel in your culture? And that's the really important part of that. But what access can they then bring to your organisation of other customers and clients who currently don't talk to you because they don't see themselves reflected in your organisation?
And we're all, as banks, certainly within the AFME membership, the GFMA membership, the CISI membership, we're all competing for talent. And talent, as has just been said, is diverse in all of its ways, and it has a choice. And unless that inclusive environment exists, then diverse talent will not last very long in your organization. So it is a commercial opportunity, and as Helen has said as well, it's a risk, not enabling it, not including it, and not deploying it effectively.
Well, thanks. That's I think given a very good conspectus on the possible answers to the questions that I raised there. I think that neatly segues us really into the questions from the floor session, because I'm pleased to say they've been coming in thick and fast. So I want to get through as many as we can. And I think we'll just go straight on to that. And this is one I think that just does follow on quite nicely what we've been talking about in the last 10 minutes. This is from Elizabeth Teo Pennell, I hope I'm pronouncing that correctly. And she says, I agree that hybrid working is here to stay. However, I believe that managing hybrid working and your workforce requires leadership and management skills, which many in leadership do not have. What do organizations need to do to ensure that their managers have the mindset and skills to manage hybrid working, to avoid separate work cultures emerging, i.e. the present in-group and the working from home group?
So Elizabeth asks a really, really good question, because we're all centric to where we are. So if we're in the office, then we are centric to those around us in the office, and will naturally have conversations there. And it takes a huge effort not to have those side conversations at the beginning or during a meeting, particularly when you've got colleagues who are zooming in or teamsing in to a meeting. In fact, I heard anecdotally of a meeting the other day where there was a meeting to discuss exactly this. Some people were in the room, some people were on Zoom, and completely unconsciously, all the people who were in the room started talking amongst themselves to the exclusion of those on the Zoom.
Yeah. I think, sorry, Karina, go ahead.
Sorry, Helen. Just at the Inclusion Initiative, we have realized this is an issue, and generally culture, because it's an issue. So we have an executive education offering, and it is for executives, and it is teaching you how to be an inclusive leader, which includes having to deal with the hybrid issues. And we've made it very practical, because I think that's incredibly important. It shouldn't take up too much time, but it should allow you everything from how you run a meeting, and not only, getting all the voices in that meeting, not just the loudest. That's got to be one of the things. But we also are trying to make behavioral scientists out of these managers, because it's about we're not prescribing this is the way to do it. We might say this is a way we'd suggest, you do it that way, and then giving that manager the tools to figure out, did that work, or does this need to be changed slightly? And that's what we're doing at the Inclusion Initiative to try and help with these issues.
So Karina, mine to build on that, I mean, actually back to how's the job changed. I have a large team of behavioural scientists in my HR function. And we are putting a toolkit together, because we do see it as a very different job as we move forward. And to be a middle manager, what a tough job, right? We expect them to understand mental health. We expect them to be able to do hybrid working, grief management, you name it. We're expecting these relatively junior members of staff with very big jobs to also be all things to all people. So some of it is about putting support mechanisms in for them, but also it's about giving them, as you say, Karina, just what's the etiquette? How do you create that equal? And actually, in many ways, it's the chairwomanship skills that you need to do to ensure you include the voices and get that diversity in the room. But we're actually putting specifically a kind of a license to operate type program in place to help people there, because they need support, not criticism. And I think quite often people are very quick to judge this population. The frozen middle, the permafrost, we've all heard it, the marzipan layer. Actually, go stand in their shoes for one day and see what they deal with. It is humbling beyond belief. And actually our job, certainly my job, is to ensure that we actually equip those people really well for what's up front. Specifically those sitting in the kind of middle path of the organisation. And at this more senior level, as you say, I think it's easier to access and give people those skills. But actually, I think the people who need most help probably are actually in the more senior part of the organisation, because those are the behaviours that need to change and have been learnt over lifetimes. And as you say, Michael, I've seen exactly what you just talked about the other day. A bunch of people, they went on mute and the rest of us were sitting on the panes, and there was a bit of laughter on there, and you're sort of thinking, that doesn't feel great. And it was just learned behaviour. There was no malice in it. But we're going to have to, there's a lot of that. And actually it's that, again, psychological safety to say, that is not right. Can't do that. And it's fine when you're with your peer group. But if you've got young people coming in to present to you and you do that sort of thing, that is highly exclusive.
Thanks very much. Not a million miles away. Here's an anonymous question that I think, as I say, ties somewhat to what we've already been talking about. How do you open up the conversation in the boardroom that a change is needed when that might mean change of the people currently in that room?
I mean, if boards are not talking about culture, I'd be pretty surprised. I mean, I find myself in the boardroom a number of times a year, in fact, being asked even more and more. I'm sure it's not because they just want to see me. I think they genuinely, they feel the accountability for it, because culture sits with the chairman normally. And then secondly, actually, they want to be engaged in this conversation. I think at the moment they are seeking to understand as well, as we all are, frankly. But there are different learning curves going on, but many of the boards come, some of them are sitting on fintechs or technology companies as well, so they're bringing the benefit of their experience from other areas. So I would say I do not have a problem getting into the boardroom to talk on this subject. My problem is maybe I'm getting in there too often at the moment, but I actually think that's a sign of the times and a sign of the board that's keen to understand the change that's happening and understanding that change is accelerating extremely fast.
No, Karina, your advisory work must be very related to this.
This anonymous person is absolutely right. In some boards, there's definitely resistance, and it is something you have to work around. There are times where, when I'm doing the sort of headhunting for non-execs, there's a sort of, we have to have a woman because we've been told, but they can make it very difficult by coming up with, this person needs to have a series of skills that will tend to be very male-centric. And hopefully, the next generation, they won't be as male-centric, but given the barriers to women, many women in financial services have not run a P&L, they haven't run a profit and loss. And as soon as you start saying they need to have run this big a P&L, you're immediately cutting out a whole series of people. And I always say it's like a football team. And I always give these nice male analogies. Because you need a bit of everything. You need the person who is superb at accounting and finance. You need somebody who's great at grasping what's happening out there and how this will affect the board. You need somebody who truly understands audit. You need somebody who understands remuneration, risk. These are different people. And the same way we talk about a diversity of gender, of sexuality, of ethnicity, you need to have people with different skill sets. So I think there is resistance in some boards, but going back to the whole idea of regulation, in the UK, we are lucky that the regulation is, regulation targets, but with, if you look at the sort of, at the latest reviews, those targets have become things where it's name and shame the companies that are not making those changes.
Yeah.
And I think that's a good thing.
To Anonymous, one of the ways in which boards do make the changes, and certainly make the changes to themselves, is through something called a board self-assessment. And typically these might be done via some internal methodology once a year for a couple of years, and then on the third year go external. I think the practice is that there's an acceleration in turnover in certain board positions, and that is coming by boards being really honest in their self-assessment and self-critique. And I think in these times when leadership has been hugely challenged and boards have been hugely challenged, the enlightened board member will self-assess and say, my skills are perhaps no longer fit for purpose to deliver not only oversight to the company, but the level of insight and foresight that is needed in these hugely volatile times and challenging times where there is no right answer. There is no clear answer on climate because we don't know what the temperature is going to be and what the prevailing power sources are going to be. In some cases, nuclear's in some cases it's out as a transition fuel. So I think in the midst of that level of uncertainty, to have an immaculate board is a real blessing, and I don't think any organization would ever claim that it at all times it has the perfect board. So there's probably quite a lot of board change that is coming up over the next year to 3 years, and we should not underestimate. We're in a little bit of and we see it reflected in the media at the moment, a little bit of a sweet spot in terms of economic cycle, because there's still enormous public sector policy support, whether it's central banks, quantitative easing, whether it's very substantial fiscal support, and down to the level of supporting people who are out of work but still in jobs via the furlough plan. As all of these policy measures are tapered, we're going to see some very, very significant spring. And that phrase that Helen used about social emissions, and to Karina's carrots and sticks, the amplification via social media of that social impatience is only going to escalate and create even more challenges for businesses, and particularly banks, because where banks have stepped forward and been instruments of government policy, and indeed had up to 100% of the loans that they've made guaranteed, the first line of defense for the government is to require and request the banks to make an assessment of that loan. So the banks are put right in the front line of making a determination as to which companies will survive based on commercial terms or not.
Thanks, Michael. Well, that's a very interesting insight from someone who's spent a lot of time in a board. So thank you for that. Slightly, this is a question here is directed to Helen and Karina, so that'll give you a chance to get your breath back. And this is from Karun Carr, and it says, Helen and Karina, do you think a lot of the sustainability issues would be resolved if HR was better represented on boards?
Helen, that's you.
Clearly.
I think you have first shout on that one, Helen.
That was an easy answer. Yes, but I don't think, I think leadership has to be, this has to be run outside of the HR function too, because I think if it's seen as an HR issue, lost the plot. It's enabled by HR, we catalyze, we can agitate for, we can be SMEs in, but it's a business issue, not an HR issue. So I think it's a yes, but, as opposed to just a straightforward yes. Karina?
I'd agree. I mean, I think one has to be a bit nuanced on this, but because at first you think, oh yes, absolutely. I think it's great if you have, and I know that at NatWest, I mean, Alison Rose, she's got your back. She totally believes in this.
Yeah.
And therefore, you have the support of the CEO and the chair.
Absolutely.
That's really important. There are other places where I don't think it's a bad idea if you did have the head of HR on the board, because the CEO and or the chair are not fully on board with the journey. But there's also now this idea, and I don't know whether it's a year or two, maybe it's 2 years old, having a board member who's responsible for employee relations, for all of that. And I think that's a person who should be also feel themselves very, very responsible for the HR function and the culture.
Okay. I mean, we certainly have a colleague advisory panel, which we have a board member who runs that, and that's where colleagues have that direct route into the board, go effectively round management. It's not round management, it's with management, but that sort of freedom of total safety of space to speak up and have that conversation and get those issues into the boardroom that may not get there otherwise. And I think it's just a really healthy environment to allow those conversations to happen.
Thanks. Okay. Moving slightly to a different area, here's one from Lee Coates. Is it time for financial institutions to be more transparent about the types of business they finance via loans or invest in via equity? The public are not generally financially savvy, so isn't it incumbent upon the institutions to explain how they do what they do? Michael, is this one for you to start on?
I think institutions are becoming more transparent, certainly by sector and by geography. You will be able to pick up the financial statements of any publicly quoted organization, financial institution, and find out where they're concentrated. You will certainly not find any client names or anything that can identify any particular clients for all the obvious reasons. Organizations are also pretty transparent by asset class as well. And increasingly in this year's round of statements, you will have seen quite a lot of transparency around commitments to whether or not a business is being managed in line with the Paris Agreement, whether it's being aligned in terms of any other commitments that it might have made to sustainability or the Sustainable Development Goals of the UN. And indeed, there are regulatory requirements that are increasingly forcing that. So the TCFD, the Task Force for Climate Financial Disclosure, is requiring that. One of the questions that really organizations are struggling with, this is not just banks, but all organizations, is this word taxonomy. How do we describe all of these different climate and sustainability related issues? How do we increasingly disclose our position on social issues? But you'll find there is a requirement to report more and more, and certainly you can be very assured that the regulators are deeply sighted on all aspects of the portfolios that financial institutions have. But Helen, you'll see this firsthand.
Yeah, I mean, I mean, when you were sort of TCFD, and I was racking my brain to try and remember what it stood for. So thank you for that. But as I say, I mean, our ESG disclosure this year runs to tens and tens of pages of detail of, as I say, asset class, sector, commitments, etc. So I think that is becoming increasingly transparent. But as you say, there was obviously client confidentiality there, but you will see targets, commitments, and initiatives that people are trying to do to ensure that we get to net carbon zero through our customers as well as through the organisation. And as you rightly say, Michael, regulation will drive us there, even if we weren't already kind of delivering that. And there'll be a requirement by next year that everybody is fulfilling their TCFD disclosures.
I think there's it's very interesting how too many acronyms, too many different standards, and we do need a simplification of them, because right now very difficult to keep track of all of them. But the TCFD, thank you, Helen, I think is one of the most helpful. But I also think, Lee, that there is a need to still finance oil. Our needs haven't gone away, and it's a very difficult thing for a lot of banks and financial institutions. There are oil companies that I would say are beyond the pale in the way they treat the environment, and Exxon certainly is on that list. But there are a number of other ones who are moving more to renewables, who are trying to do the best thing within the fact that oil is a dirty business. But it's rather like mining is a dirty business. But without copper, we're not going to have electric cars. We're not going to have this whole new electric economy of ours. So you have to figure out who you invest in, how you help them change, invest in the good guys and don't invest in the bad guys. But you've got to still be investing, even though investing or making loans, even though some people will judge you very harshly for that.
Yeah.
I think, Karina, sorry.
I was just going to say, implicit behind the word, and you heard Helen use it, transition, is smooth rather than abrupt. Yeah,
and that's exactly the point I was going to make, Mark. These companies don't exist in isolation. They exist with massive supply chains. If you take the oil industry and look at Aberdeen, everyone pulled out of there. The socioeconomic impact of doing that, and then call yourself a purposeful company. Think about that one very carefully. So I think you have to think really systemically about this, about what is the way, like you say, how can you help them transition to renewables where that might be appropriate, and think of smarter ways of doing things, but also think of that whole supply chain.
Thanks. Right, well, time to move on to another one, and again, this is a slight shift to another topic. This is much more specific on the question of related to deforestation. But we've had two questions on this, so I think it's only right that I bring this in. One of them is addressed to you very specifically, Helen. So maybe start with that, which says, "Hi, Helen. Can you let us know what NatWest stands on deforestation?" And what actions you're taking to remove deforestation from the NatWest portfolio. And that's the specific question to you. And there's another general one from an anonymous questioner. We are seeing great progress for sustainable finance from many institutions, but we are still seeing large projects related to unsustainable practices like large-scale deforestation for agriculture, receiving finance from institutions based in regions like Asia. How can we bring investment institutions outside of Europe and North America on board to make sustainable finance the global norm, not just a regional norm? So they're sort of related questions, but two different ones. Helen, do you want to start on the NatWest position? Or is this something you feel you can comment on? It's maybe asking a lot.
Yeah, I'm not close enough to the detail of that specific part of the sector, so I won't wing it in that respect. But actually, I would go back to transition being kind of the key focus, and the fact that actually we're driving into investing in renewables and as a key priority, as opposed to investing in maybe older energy sources. I can definitely go and find the answer for you on that, but I'm not going to make it up as I go along.
That's very. I think that's very good. That was a very rather an unfair question in a way to you, but thanks for tackling. Michael, do you, I mean, on this question of kind of regional disparities, do you an approach? Do you want to say so? You've had a very international career. You must have a view on this.
Yeah. So yes, no, and I think it is different banks, different geographies are at different stages, and certainly there were some headlines the other day suggesting that maybe there are certain Asian banks that are continuing to finance, as part of their own resilience and supply chains, deforestation with the purpose of maybe growing and farming soya more intensively. And whether that happens to be in Brazil or it's palm oil in Indonesia, I think we absolutely can determine and trace through organizations like the Banking Environment Initiative exactly where these activities are taking place and understand which banks are financing them. This is a global issue, as you correctly point out, and certainly at the Global Financial Markets Association, we spend a lot of time amongst banks from all over the world discussing these subjects. You can find out exactly which organizations are on the board. A lot of the work on climate for the GFMA has been led by AFME. And if you go to the afme.eu website, you will find the latest report that we have, our members have contributed to, which is together with the law firm Latham & Watkins, looking at all of the disclosures relating to the climate agenda and the climate financing and how out of sync they are. And certainly, I think more work needs to be done on this. And you will have noted that quite a lot of the initiative that President Biden convened on Earth Day the other day was around trying to get all the major countries, or certainly he convened the countries that contribute to 80% of the world's GDP and approximately 80% of the world's carbon creation, to make commitments ahead of COP26 later this year. And you're going to see an acceleration in the amount of effort that is made to introduce common language around the subject and a common set of, albeit staggered, commitments. You'll also hear countries also appealing for something that is built into the Paris Accord, which is this concept of a just transition. Because the UK and certainly the United States have had the privilege of being able to pollute the world for longer than China and other markets have had, markets like China are saying we're going to need longer to adjust away from fossil fuels. But we need to make a smooth transition for our own purposes as well, but it needs to be a just transition, and we will need significant financial support to be able to make that transition in the timelines that we need and you want us to sign up to.
Well, yes, I mean, clearly a lot of these issues are going to be at the very heart of COP26 later this year, which of course is the center of our focus, Jeffy, over the coming months. Karina, do you want to add anything on that?
I mean, really just one sentence on this, because I totally agree with Michael, and I think he mentioned Biden. Right now, it's a great moment for climate because you've got both Biden and the Chinese leader in agreement. This is the one thing, about the only thing they agree on. So for both of them, for their domestic agendas and for their foreign policy agendas, it will be very useful to see advances, to see agreement. I think it's in both their national and international interests. So I think we will see things happening at a more global level, so that Europe will not be the outlier, except we will always be in advance, because this is something that we've picked up on earlier, and cultural differences do exist.
Thanks. I'm conscious we're getting quite tight for time, but I think we've had a lot of questions. I'm very keen to cover as much as we can. This is slightly stepping back to some of the earlier areas, but a final one we will squeeze in here from Gregory Lemire-Smith, who says, the rise of soft issue discussions at board meetings appear to align nicely with the increased use of the internet. Stakeholders now have the ability to express themselves easily and influence corporate decision-making. It brings risks and it brings challenges from a governance perspective, so this feels like a good development. But is the corporate space ready for this level of added pressure? And do any bodies exist to help corporations in this area? I don't know, Michael, Helen, or well, any of you could have thoughts on this.
Well, maybe we're talking about corporate reputational risk management here, and perhaps linking it to ESG. And obviously Super League is in the headlines at the moment. You had an extraordinary demonstration in a very short period of time of the power of what a pretty small number of highly agitated local communities can bring to bear in a very short space of time to change policy making and decision making. And I would not be at all surprised if you didn't see activists of all sorts all around the world learning from that, and begin to see much more activist activity that is able to accelerate the rate and pace of change.
Yeah, and I think maybe a slight sort of difference from that I would sort of add into the room, which would be if you're focusing on the right things, if you kind of feel you're doing the right thing in some areas, not to necessarily knee-jerk to some of the reactions that you do get from activism. And I think if you see some of the issues, maybe in some of the social impatience issues with Black Lives Matter last year, is people knee-jerked into response rather than really thinking about it. And senior management teams, boards, etc., are really taking their time to think through these things as opposed to respond. I mean, Super League I won't comment on, but I totally agree with you, Michael, on that one. But on some of these other issues, it's about really, if you've made your decisions with real sort of thought about different stakeholders, if you use your partners like a blueprint for better business, and there will be many others like them who really challenge you to think through the eyes of different stakeholders, then when those pushes come, then and you will get some stuff wrong. We're all going to get things wrong, but actually you've got your kind of resolution to lean back on, because you've actually done a lot of thinking about some of those objections in advance of that. But I do think on the social media side, we are basically going to see that voice come up further and further, whether it's, I mean, I think there've been some rather ridiculous ones recently of Colin the Caterpillar versus whatever the alternative one was about people taking off different product types. But social media carried away with that, and it'll carry away with lots of different things. If you lend products that are off mark, you've got to be really ready to respond to that, and when they get on social media, because they will really build up, and you've got to be really careful not to go out again. Don't go chasing headlines on these things, because if you chase headlines, social media will judge you. So be really clear what you're going out with.
I think it comes back to I mean, it's building really on what Helen and Michael have said. It comes back to what that Magic Circle law firm senior partner said. Because you do the right thing, you will not be able to anticipate everything. You will get some things wrong, you will get some things right. But this is part of managing a financial institution or any corporate today. And to the questioner, can I just take issue with the idea that these are soft issues? That's, 20 years ago, we called them soft issues. We've now realized they're central to our society. they're central to the world. And I don't think that's an exaggeration, because when you're talking about climate risk, it is central to the world and central to the people on it. Not soft issues at all.
Well, that's a very good point to conclude on. Thank you very much, Karina. So, ladies and gentlemen, I think all that remains for me is to say a few words of thanks. First and foremost, of course, to our three distinguished speakers. I'm sure you'll agree with me. We've had a terrific conspectus of views on the subjects we're here to talk about today, from three people at the different parts of the heart of the world that we need to be examining. Napoleon, who died 200 years ago this very day, so I felt he should get a look in, once said that a leader is a dealer in hope. And it was encouraging, I think, despite the many challenges ahead of us, all of you brought us at least some of that in your presentations this afternoon. Thanks also to our own Jeffy team behind the scenes. These events don't happen without a lot of hard work, and we're very grateful for all their efforts putting things together. And last but not least, thanks to all of you for joining us today. We're very pleased to have had such a large and varied audience for the event. As I mentioned earlier, we are today trying out a new networking feature which allows you, the attendees, an informal opportunity to network and discuss today's session. The link has just been distributed via the chat function, and it indicates you can get there by way of globalethicalfinance.org/lobby, that will be by. And I do hope we'll see some of you there in a few minutes' time. Just before we close, though, I'd like to draw your attention to Jeffy's forthcoming annual summit conference, Ethical Finance 2021, which will take place over the 3 days from 8th to 10th June. As many of you will know, this normally takes place in October, but this year we felt it made sense to bring it forward to 6 months prior to COP26, so as to make it the centerpiece of our Path to COP26 campaign. As last time round, the summit this year will be entirely online, and its headline theme is Financing a Sustainable Future, Climate and Beyond. Day one will feature global perspectives from various international centers. Day two will focus on sustainability issues, and day three will be looking at social questions and the SDGs. And picking up on today's discussion, it will include a dedicated session on leadership. It's free to sign up at ethicalfinancesummit.com. That link is again being distributed via the chat function. And we hope that you'll be able to join us at some or all of that. And indeed, also at our next roundtable, which will take place at some point in October, date to be confirmed in due course. Well, we hope, as I said, to see some of you shortly in our new virtual lobby. But for now, I will close the formal meeting by thanking today's speakers once again. And if you have been, thank you for listening.